despite this week's bounce back. Our next guests are wary of the economic uncertainty and say it could continue to weigh on this market. Joining us now are Bob Dahl from Crossmark Global Investments and Barbara Doran from BD8 Capital Partners. Guys, welcome. Bob, is your concern reflected in the 10-year we were just talking about?
Yeah, I heard your comments there as the 10-year approaches that magical 460, the 30-year toward that 5% number. Last time we were at these S&P 500 levels 90 days ago, rates were lower, 30, 40 basis points lower on the 30-year. So that's, I think, problematic. We've got to watch it. But also, earnings estimates are down $6 or so from when we were at this level before. At that point, we were talking about, gee, when's the Fed going to cut? Now we're not so sure. So the fundamentals are a little less certain. The soft data in the last 90 days has collapsed. Hard data weakened a bit. I think there's more weakness to come. So put that all together, we're a little cautious back at these elevated levels.
Now, Barb, you've had an iron stomach when it comes to tech and big tech, NVIDIA in particular, but you weren't so eager around the prospect of buying more before. Have things calmed down enough? Is there enough certainty for you to start changing your mind?
Yeah, no, I was very cautious, certainly because, not least because of all the uncertainty with tariffs. I mean, how much would the worst case stick there? But I think you've had a number of things happen, particularly with NVIDIA and AI. I mean, you saw, for instance, CoreWeave today, that demand for GPUs is continuing, or Cisco, almost a doubling of their AI products, which is small for them, but it's an indication of the demand. And plus in NVIDIA, you have the Trump administration looks intent on peeling back the restrictions on exporting to different countries for our high-tech GPUs and things like that. And also the order out of Saudi Arabia, because that's been part of the story that we haven't seen come to fruition yet. And that's about the sovereign demand, in addition to the hyperscalers and corporate demand. So, yeah, I think things have changed. And as you know, I've held on to it through all of this because I do believe in the longer-term story, but it was tough to buy when things were so uncertain. And of course, I think things remain uncertain. Yes, the worst case tariffs is off, but right now the blended rate is about 17.8%. And as Bob said, that is going to slow growth and it's going to be inflationary. Whether it's a one-time adjustment or gets embedded, that is impossible to know right now. But the tariffs are still a very big risk, and the ball is already rolling in that direction.
Bob, is Washington still the tail wagging this market? And if so, is it more about these 90-day tariff pauses, and there are a couple of them rolling, or Congress and the budget?
All of the above, no question about it. The budget is getting more and more attention appropriately, as is the tax bill. None of us wants to see the largest tax increase in U.S. history on December 31st if they can't get their act together. So that will be front and center. But as Barb just mentioned, the tariffs are still a big uncertainty. We feel better that with China, it's 10, 30 instead of 125 or 145, depending which side of the coin you were on. But that's still a lot higher than where we were. That's the case for tariffs in general. So, yeah, it's less bad than it was, but we still have a lot of fighting to get through.
Barb, CoreWeave is now up, I think, let's see, about 8.5%, 9% here in overtime. And this comes after some excitement about perhaps loosening restrictions around NVIDIA, AMD. We've got NVIDIA earnings coming up. Are those a catalyst for this market that might cut through some of these concerns we've been talking about?
Well, it certainly has been helpful. As we know, the AI trade and mega cap technology has been critical in leadership phase in the last couple of years. And certainly for the last 6 months, there's not been much happening there because there's sources of profit taking, particularly when times are uncertain. But I think the AI trade is important to this market because, again, it's the mega cap names, the mega cap tech especially, that have led the market and were such a big percentage of the gains in 2023. So, yes, I think it's an important support for this market. But it does not change the tariff story for many other companies and what we're going to see in the economy as a whole.
Yeah. Okay. So, Bob, what do you buy for safety?
I think you have to own some of the AI stories. Look, I'd rather own them at the lower levels. I mean, take NVIDIA. We've been talking about it. That stock was in the 130s a few months ago. It got down to the 90s. That's when you buy it. At 130s, I'm a little more neutral again. So, thankfully, we've had a lot of volatility. So, for traders, it's been a great opportunity.